I'm Matt Breimer. I'm one of the co-founders here of GA. We have some incredible guests here tonight. Speaking of following their passions and creating amazing stuff in the world that they believe in. We have Cameron and Tyler Winklevoss here, who are going to be interviewed. And I want to read a little bit about them and share their story. And then we have Nathaniel Popper here, who wrote a book all about Bitcoin that featured these two guys. It just came out 2 weeks ago, so check that out. What's it called?
Digital Gold.
Digital Gold, all right. So pick it up. So Cameron and Tyler Winklevoss, they are the co-founders of Gemini, a next-generation Bitcoin exchange. They graduated from Harvard with degrees in economics and also earned their MBAs from Oxford University. Not to just be incredible on the academic side. In 2008, they also represented the United States in the 2008 Olympic Games in Beijing, China, where they placed 6th. Pretty incredible. Cameron and Tyler have also been angel investors and entrepreneurs in emerging technologies since 2003, so they're not new to this game. They began participating in the Bitcoin economy through direct investment in 2012. And in addition to heading up Gemini, they're also currently working with the SEC, waiting for approval on Coin, which is a new Bitcoin ETF that they are building out and pioneering. So that should be coming soon. They've also launched WinkDex, which is a Bitcoin price index that will price out the ETF. So big round of applause for Cameron and Tyler. Well, yeah, we're happy to have them here. And then we also have Nathaniel Popper, who's going to be leading the conversation. Nathaniel is a reporter at the New York Times, a business reporter, author of Digital Gold, as I mentioned. The full title is Digital Gold, Bitcoin and the Inside Story of the Misfits and Millionaires Trying to Reinvent Money, which was released, as I said, just very recently by HarperCollins. So thrilled to have Nathaniel here as well. Round of applause for him. Yeah, without further ado, thank you all for coming, for being here. Hopefully it's a pretty engaging conversation. Thanks to everyone who's participating and listening in online. I think we have over 1,300 people who are tuning in now, so no pressure, guys. You know, don't pick your nose.
So worse.
Yeah, we'll let you guys kick it off. Thanks again.
Great. I'm very excited to be here. These guys have lived through as many sort of great stories as most people get to experience in a lifetime, and this Bitcoin story, which is what I've sort of been dedicating the last year and a half of my life to, is really one of the great sort of technology stories of the post-financial crisis era. And there are so many great stories mixed in there. And I was lucky enough to sort of get pretty deep into Cameron and Tyler's story with this, which goes back a ways. And I think it's, I think people still don't fully understand what Bitcoin is, and we're going to hopefully get to that. People also still are frequently not clear on the role that these guys played in where Bitcoin has come today. I know I wrote my first story about Bitcoin actually was also your first story about Bitcoin, and the first story pretty much in the New York Times about the stash of Bitcoins that you guys had put together. And since then, when I've spoken about Bitcoin, people who don't know much will frequently say, is that thing those brothers invented? And on the other side of the spectrum, you have people, sort of lifers in Bitcoin who have questioned, how much are these guys in it for the long haul, and how much have they really sort of thrown themselves into this, and people sort of assumed you were doing it, or Bitcoin was doing it, or somehow it was for the publicity. And I think what surprised me in the reporting of my book is just how much you guys have thrown yourself into this. I mean, you've talked about the sort of heart and soul of dedicating yourself to this. So that's going to make for a great conversation here. I want to start maybe before we get into to Bitcoin, just by covering sort of the different things that you're doing right now, because you do have Winklevoss Capital. Just give me a sense of how you're dividing up your time at this point between the angel investing, the Gemini, the Bitcoin exchange, the ETF, sort of how you're dividing up your time and your money.
I'd say that Gemini's pretty much our full focus right now. We're building a company. We've got over almost 10 to 15 people right now, and because it's a money service business and there's so many different aspects you have to get right, just good enough is just not going to cut it. So Gemini is really our full focus, and we're very much just founders and entrepreneurs. That being said, we started off a couple years ago with Winklevoss Capital, investing in many different startups, and we're still doing that angel investing, but we're able to scale that, and we've sort of spent enough time sort of, I think, building our network and our filters where we can sort of manage that while we're also building this company full time. In terms of our ETF, the ETF, because it's not sort of actually live yet, it's, there's work, but it's sort of a registration, it's a process of back and forth. So it's not as sort of hands-on or intensive as building basically a company from the ground up. And I guess Bitcoin companies, I'll sort of dive in there a little bit. Building a Bitcoin company or a startup is a little bit different than a typical startup that can sort of start, let's say, out of a garage or a dorm room, and security might be the fourth or fifth priority or something like that, or it has no money involved with it, so you don't have to really worry about know your customer rules, anti-money laundering, things like that. So I sort of break the business into four distinct silos. There's the security aspect, which is basically vaulting Bitcoin, which you have to get right. There's also the compliance, regulatory aspect, that you have to both comply with the law, but also make sure that people aren't doing fraudulent activity or illegal behavior on your platform. Then you've got the product, which you have to get right, because that's what people are going to touch and feel. There's both sort of the more retail or hobbyist type traders who will touch the website, and then there's the more institutional people who are working with APIs and things like that. And so basically, you've got those different aspects, and then you have a banking relationship. That's sort of the fourth aspect. So you have to get somebody comfortable to bank your business.
Then it's Bitcoin, and a lot of people don't even know what it is. So.
Right. So
you spend half your time just explaining what it is.
Exactly.
So unlike a typical startup where getting a banking relationship is not even a question, security may be important, but not to the degree where you're really literally storing people's value. There's a lot of moving parts, and there's a lot of things, quite frankly, that most entrepreneurs don't want to deal with. They don't want to have to, deal with the regulation and things like that, but it's obviously very necessary.
Yeah, I think the short of it is that there's a huge barrier to entry for a money service business that is different than most startups. And like Cameron said, most people just think about product and we have to think about security is important. We see that with Sony, but it's absolutely catastrophic to, a Bitcoin business. We saw that with Mt. Gox. With regards to banking and regulation, these are things that we never thought about before we, got into Bitcoin in that kind of sense. And most people in the tech world don't. They don't have to. If you're building a social network, you're building a social media company, you don't know what the acronym DFS stands for. And money services business, it's an alphabet soup of, this body and that body. And so, you get an education in that, but, there's a bunch of pieces that you got to bring together that we felt we could do that.
So the moral is don't start a money services business.
Don't start a Bitcoin. Okay.
Yeah.
You can end it there.
Yeah.
So before we dive in further on all the Bitcoin stuff, on the angel side, how many investments do you guys have at this point, and are there any that you are particularly engaged with, who you're talking with a lot, or you're talking up a lot in the world?
So we have probably about 50 companies right now, and some of them, are more hands-on than others. There's, a lot of times we'll let's say invest in a company in the Valley. They're starting there. They do sort of a proof of concept. Maybe they've gone through an incubator like YC. They start expanding, and usually their second or third stop is, let's say, is New York City. So, for example, this one company, Caviar, which is basically a higher-end, seamless, basically creating that link, a delivery linkage between restaurants that probably would never work with Seamless for a variety of reasons, partly because Caviar takes they sort of manage the workforce rather than the restaurant managing the delivery team. So basically they expanded in New York, and we were there, our office, our family, Winklevoss Capital served as their New York home base, and they plugged into our infrastructure for about six to 12 months. And so helping companies sort of come into New York and grow here, and they, of course, then got their Series A and then were acquired by Square. But
and the problem we identified, was an obvious problem if you try and find office space, is that landlords want financial history, and the conundrum is we're a startup, we don't have any history. And then you've got to take out a 3 to 5 year lease. And as a startup, we know that that's an eternity. You could go, boom, bust, boom again, and shrink and explode or whatever. And so making that kind of commitment is tough. So I think the real estate market is difficult in New York. It's obviously expensive. There's not a lot of it, but what's required to have an office space. So that's what we kind of did as an incubation type thing for companies that we're going to do, move over to New York. I mean, when people ask us like what companies, this is when I was blank, but a couple ones would be like Ship, which is sort of an Uber for shipping. You call it a hero, it will come to your door, pick up your package, and then bulk it, ship it, and get a bulk shipping rate, which can be dramatic discounts. So the cost of having to get that on-demand pickup is actually a pass-through. You get in the savings on the transportation. So that's pretty exciting. I mean, we've only been doing this for 2 or 3 years. So a lot of our bets are promising, but it's still really early. And that's one of the difficulty things, is you put your money in something and it's a zero until proven otherwise. It's completely illiquid. And even when we think of like things happening really quickly, like Uber, it's still 5 to 6 to 7, maybe 8 years before that liquidity event. So it's a very long-term type investment. It's incredibly risky. We have a portfolio of 50 companies, and it feels like it's about the right number. You have to play the numbers game. It's kind of counterintuitive. You think, I'm just going to work really hard to find something I really love, and you realize that like you can't really excel these ideas or napkin ideas. You're really investing in people, and what does that really mean? Well, like you have a good sense of them. They check some boxes. Maybe they've got a track record, but at the end of the day, there's a lot of like instinct. I think a lot of angels say like in 15 minutes, they know whether they're going to place a bet or not. And you hone that down to a science as much as you can, but in reality, it's so much art, it's so much experience, and it's so much really your network of people who you can bounce the idea off of. So I think that, I guess I forgot where I was going with that. But
have you ended up being surprised, as that is a distinct skill, as you say,
yeah.
Angel investing, spotting that can be totally separate from anything else.
Right.
Did it require skills that you unexpectedly did or didn't have as you went into that? I mean, you're obviously focusing more on your own company now.
So I think that, it's feeling people. So being on like teams and training, you get a sense of guys you can count on, guys who are winners, like in the toughest moments. So you sort of start evaluating people around you and yourself all the time, because at the Olympic Games, one mess stroke, and there's, it's a 6-minute race. Your whole life, let's say 10 years of training, whatever amount of years, it's at least 5 or 10, comes down to one day in 6 minutes. And the first 30 seconds can completely scuttle all of that, right? So you're going to the line and you're making judgment or value, analysis on the people you're around, and your whole time going up there about, who are the people I want to go into battle with, sort of. And if you make a mistake, good luck, maybe you'll get it back next time in 4 years, minimum, right? And so, 2 mistakes or 2 screwed up Olympics, you see that happen, that's like an 8 to 12 year kind of quest of, just one misstroke, one crab in the race. So I think you just have to get like super good at scanning and having like awareness of what situation and who you really want to bet on and yourself. So there's all those sort of like tools that are happening, and I think you sort of transfer that over to, okay, if this is not winning a rowing race but placing a bet on a person that you might want to be a teammate with for a long period of time, and there's going to be a lot of pressure and ups and downs, does this person sort of fit that criteria?
I think Chris Sacca said today, right, that he looks for somebody who actually does the dishes when he brings them over to his house. Everybody has their own criteria, I guess. So you are the Winklevoss twins, but you are also two people. And I want to, before we dive in deeper, tell me how, just talking broadly, how you tend to divide things up, and you know how personally you guys tend to distinguish yourselves in particularly the investing and the startup mode.
Well, I'm righty, he's lefty. So that's, we sort of use different sides of our brains. I think Cameron might be a little more process-oriented. He sort of like grinds through emails like without, I think he's really good at attacking sort of tedious stuff and really...
You take the boring stuff.
Have a twin brother, he'll take care of all that garbage.
I just wanted that.
I feel like I like strategy a lot and sort of the larger decisions on the chessboard, and he's really good like day-to-day, shoveling the stuff. And I think
can't wait to hear how you describe this.
I think we both, you have to do it all, right? Like top to bottom. I mean, there's no one who's, I don't care like what company you're running or what you're investing, you're gonna deal with that stuff like washing the dishes that you just don't wanna do, and you're gonna be doing that all day long, at least that's what it feels like to me. But I think that the sort of the larger, stepping back and like the larger strategic decisions, I think I'm pretty good at. And I think Cameron's just more, I don't know, like do you agree with that?
Maybe you don't. Yeah.
So Cameron lefty,
Cameron lefty,
right brain.
Yeah, a little bit
right
more,
brainy.
relatively maybe more, I guess like, I don't know if artistic's the right word, but like a little more, slightly more creative, but not that he's not creative, but like all, I don't know.
Like I'm more creative in like...
No, have it out. He said you're like shoveling the shit.
But he's probably more, so
That was
like
below the belt.
the way to, like when we were studying, let's say for a test in high school or something, I would just start studying and my papers might be like all over my room on the floor, just like going through it. He would probably spend half his time organizing and like making sure his notes are correct, and then start studying and like not get as much studying done before the test. So we both get the same grade, just come at it different angles.
So I guess I'm smarter. I did less studying.
You're a rejoinder?
I'm better looking.
Okay. We can leave it at that. It doesn't get any better than that. So, all right. So let's get back to 2012, which is kind of when this Bitcoin story begins. You had finished up rowing, and the Facebook settlement had been relatively recently. Had come relatively recently.
Technically settled in 08, but there was a lot of battles beyond based on securities and securities fraud that was alleged, and it's all history now. But that's about right. We were finishing up our career as athletes. We thought about training through to London. We didn't end up going for it. The Facebook stuff was definitely wrapping up, and we were looking on what's our next step. So we figured, okay, like we want to get back into this in entrepreneurship. Our dad's a serial entrepreneur, so we grew up thinking about guys like, Bill Gates and Steve Jobs and, messing around computers. We weren't in this, the dinner conversations weren't about, how are the Yankees doing? Like, not that, the Yankees are great, but it just wasn't about like sports and stuff. We weren't really from a jock family, although, my parents, they work out and my dad runs and stuff. It just wasn't the pastime. It was more about ideas and computers and things like that. So we always knew we'd kind of get back into that, and we thought investing was a natural way to do that. We would get to know entrepreneurs, learn more about the companies they're doing, the ideas that are out there right now, and also meet other investors and see like how are people thinking. It's like Silicon Valley and the startup tech scene. It's really an art form. It's got a different lingo and a language, and you guys know that here. It's obviously it started really back there in the 60s or 70s, but like things like failing fast and doing all these things are like kind of counterintuitive. Like go out with a product that you're embarrassed with. That's just not how the way you're taught in school. You're taught to hand in your paper, and it better be an A+. Mm-hmm. And so those little things. I mean, you know about it and whatnot. And we just wanted to transfer also a lot of our rowing knowledge and experience into like whatever worked there, because I think there's a huge universality with sports. Like. Once you start seeing what you're doing, like on the field, off the field, and vice versa. It's like incredibly interesting, and we could never have sat in a boat, pulling on a piece of wood to try and move our boat, a millimeter or half an inch faster than the next boat if it wasn't about something greater, and it wasn't about laying bricks and building something. So I think that coming into investing was just a natural way to get in, and I think we always wanted to build something again. We just never, we were kind of looking for our moment.
And what role did your experiences, with the lawsuit, with Facebook, all of that, how did that influence what you were doing moving, thinking about what you're doing next? And first of all, was it that financial settlement that sort of allowed you to start thinking about, what are we going to do with this money?
I think it definitely allowed us to basically start investing ourselves as angels, and so. And
how did that experience? Going through that, did that lead you to? Do you think you might not have ended up as investors if you hadn't been through? How did that get you to that place?
I think eventually, we would always sort of have gone into sort of the technology startup space. It might have been a little bit different or a different entry point, but. The lawsuit sort of was kind of this parallel thing. We spent the vast majority of our time training for the Olympics, and they almost in one way played off each other well because you sort of can compartmentalize, and we had this huge passion and this thing that was basically consuming our lives for.
If you have a bad day on the water, you can think about this. If you have a bad day in the courtroom, you can go think about how the water was fun. It was actually a healthy, like Cameron said. It was, one was very, they were both very mental, but very different. And it was great to have an outlet in a way, because you're sitting there, you're training 6 hours a day, 11 and a half months a year, 6 days a week. Like, I wouldn't be here right now if I was still training. Like, there was no such thing as a Friday night. You're up at 6 a.m., you're in bed by 10, like rinse and repeat again and again and again. So it was good. The guys who did well had things outside going on. Now, obviously, I wouldn't suggest searching for a lawsuit or something. That's just the way it happened for us. But I think
one thing, also it's important to note is when the whole sort of Facebook, when we started to build a social network on campus in 2002, there were no startups at Harvard at all. In fact, it took us a lot of time and effort to find the first programmer that we worked with. Graduated and went off to Google. It took us another programmer, and then we finally found Mark. But it was a really big struggle finding people who had the CS, background, who were also willing to take sort of a risk and try something entrepreneurial.
And the CS major was totally dead at Harvard at the time. Nobody took CS.
It was probably one of the least popular majors, and now it's tied as the most popular. So, and the dot-com bubble had burst a couple years before. People were still hurting. People were going to banking, consulting, or getting their MBAs. Nobody was thinking about startups. So we were working there was literally no ecosystem. We were working in a university trying to get this thing off the ground. So it was in many ways very humble beginnings. There was no real venture capital or this. There was going on the West Coast, but people weren't.
But you had to go to almost Stanford to be the kid in the dorm room who got funded. We spoke at Harvard back in 2012, and CS, like Cameron mentioned, it's everybody's taking CS, and the kids we spoke to that were in the CS department, they're all funded too. They're undergrads.
So 10 years later, the situation is dramatically changed. But so I think the reason I kind of brought that up is whether we had had a settlement with Facebook, we would have found an entry point.
Well, you raise an interesting point. So taking the lawsuit out of that experience of actually creating a startup before you had legal problems, how did that then shape? What did you learn from that prior experience of having created a startup?
Well, so our first startup was actually, we created the rowing program at our high school. So we joked that was sort of our first startup. And we also built web pages, and when we were 13, we went on AOL into chat rooms and tried to proposition business, and we've got a few clients and built them some websites that look like they're from, I don't know, what year would that have been, 1997. They really look like it, but we got paid, we got checks in the mail, and that was kind of the first thing. So we grew up in a really entrepreneurial household that way. So we had this website company, I think it was called Winklevoss Technologies or something. We made it short, wintech.com. And then we started rowing. Our next door neighbor was a good rower, but there was no. So we grew up in Greenwich, Connecticut. There was no rowing there. There's plenty of water, and there's plenty of ex-rowers, but there was no rowing because people usually went away for high school, and we didn't want to go away for high school. We're like, hey, I want to stay home. Kind of like my parents are cool. So we started out and we approached our headmaster and started the crew team there, and next thing you know, every school has crew now, and we kept going into college. And I talk about, I gave a commencement speech today at our grade school and talking about how, we didn't plan to be Olympians. It was this, this situation. We planned to start a website, and then that didn't go so well, and we pivoted into continuing our passion as rowers. So there was a lot of silver lining to that, and I think Cameron makes a good point of like, if you have a will, you'll find a way. You'll pivot somewhere. It may not be the same thing, but there is this concept of obviously turning lemons to lemonade, and we've found ourselves doing that an awful lot.
All right. Well, so let's get to Bitcoin. This is, among the great elements of your story is how you first heard about it. You guys were in Ibiza, or
Yep.
Ibiza, should we say?
Sounds like which part of the world you're from. Right?
If you're a British DJ, you got it right.
And if I'm not, that was Cameron. You were the first point of contact, right?
Yeah.
And do you remember the first thing you heard and the first thing you thought when?
I didn't really have too many thoughts because at that time I hadn't really thought about Bitcoin.
We went on vacation to get away from this stuff.
I was trying to get away.
Well, so when this guy David Azar, who's sort of walked up to you and mentioned this, do you remember what your initial response was?
I think that.
And what did he say? He basically said, "Have you heard of Bitcoin?"
I think if he was saying, "Have you given much thought to virtual currency and Bitcoin?" And at the time, like I was sort of just getting into startups, so I was thinking more like on the company aspect thing, not really like, "Hey, have you heard of this new awesome decentralized money protocol that allows you to send value over the internet?" No, like I haven't been looking in that direction at all. But it sounded kind of interesting. And I said, sure, just shoot me a direct message on Twitter. I'll take a look. And when we got back stateside, probably a week or two later, we connected on Twitter, and he sent over some information, and I started to read it, and I said, Tyler, you should really come over here. This is either, like the next big wave or complete bullshit. One or the other. It's a very binary outcome. And so we started reading it, and then I think we did a phone call basically the next morning, and met with some Bitcoiners literally 2 blocks away from here in Flatiron, and spent the better part of a morning and hours just like going back and forth. What about this? What about this? And every answer back was sort of better. Like it made sense. All the guys that we were talking to like had already heard these questions like a couple of times, or had already been building.
And they had already gone through this process themselves.
A lot of them were putting every dollar of fiat that they had into Bitcoin, or taking their salary in Bitcoin. So not only were these guys incredibly like excited about it, but they were literally putting their money where their mouth was. And so there's this like energy, this feeling that we just have to get to know this more.
But before I'm just curious in the audience to get a sense of this. Can I just ask, how many people in here have ever owned any part of a Bitcoin or many Bitcoins? Is this?
Yay.
Half the room, maybe? Okay. And how many people are not entirely sure what Bitcoin is or how it works? Feel free to admit it. I think that's most of the American population. Okay, so it's just, that's good to get a sense of this. So to help everybody, how do you, what's the simple, like when you get with Bitcoin people, one of the conversations that frequently comes up is like, just how do you describe it? Because as I frequently point out, it's actually many different things.
Yeah.
So where are you right now? And actually maybe a useful, do you guys describe it differently? Do you have different descriptions that you use at all? Or
it partly depends on sort of the audience, right? And one of the biggest challenges to understanding Bitcoin, it's a very simple distinction, but I think people miss it initially, is that Bitcoin with a capital B is the Bitcoin protocol. It's like money IP, right? Sending value through the internet. And Bitcoin lowercase b is the asset that travels through the protocol. So it's sometimes you're talking about Bitcoin, and when you're writing it down, you can capitalize. When you're actually speaking it, you're talking about the protocol, and someone might think you're actually talking about the asset, or vice versa. But I think when we're talking to sort of like the investment community, we're typically talking about the qualities of Bitcoin in relation to gold, and how we think, literally to the title of your book, it's literally a digital gold. And if you take the sort of the 9 key characteristics of gold: scarcity, durability, portability, divisibility, and just go across the board, Bitcoin is as good, if not better, than gold. The one thing gold has on Bitcoin is thousands of years, but if you look at typical the technology adoption curves today, I think Bitcoin, it's very possible in the next decade could totally gain sort of that catch up to gold in terms of feeling like a mature store of value.
I mean, we've sort of come down to this, what is it at its core? And it's internet money. It's money that was built specifically for the internet. And that's very different than the money that, the way money moves before that. And just like bankers didn't build the internet, money that bankers built, it's like doesn't work as well as the money like Bitcoin that technologists have built. So I think that that's sort of conceptually this idea that this is internet money. This is how money should move on the internet, but it wasn't invented until 2009. I think another sort of way of looking at it is digital scarcity. How can you make ones and zeros scarce? And Satoshi Nakamoto, Bitcoin's creator, solved or cracked the Byzantine generals problem, which you talk about in your book. And he made ones and zeros actually scarce. Now that is an incredible thing to think about, because when we think of data, it's pretty plentiful, and it's not a scarce resource when we think about it. We don't even meter it on the internet that way. Mm-hmm. So I think it's sort of like digital scarcity, internet money, the current money that we have, the current way we send money on Fed wires and ACH is like a square peg in a round hole when you use it on the internet, and that's why micropayments don't really exist. That's why your experience with PayPal is not that great, and the traditional system is slow and inefficient. It is not the same as sending an email. And then that sort of moves into the metaphors of, we used to have this thing called long distance phone calls and pay. Everybody probably remembers that. You called to California, it was really expensive. My mom was on the phone to my relatives in California. She'd be like, "Be quiet, I'm on the phone." It was a big deal. It was it costs money, and no one, kids growing up today, they call wherever they want. They Skype, to anywhere in the world virtually for free, and that's because of the invention of a protocol. And so when people start feeling, getting that idea, and when you start saying you used to mail a postcard, all of a sudden you have email. When you start using those metaphors, people instinctually, viscerally get it, and then oh my gosh, there's something here that's like all these other things, and it potentially could have as much disruption and impact.
It's these two things. It's the kind of the digital token, the thing that people invest in, and then this whole network that supports that,
right,
that sort of makes it possible to move it around, the sort of email, right, for money.
I mean, yeah, exactly. If I can send someone in Sri Lanka fractions of a penny as easy as I can send them an email, and people don't really understand how, the average person can't explain how email works. And they don't necessarily understand. They just know that it works, and that's good enough. It's earned their trust and confidence. And Bitcoin, one day we believe, will be like that, and it's something that's easier to experience than it is to exactly explain. But once someone experienced signing up to Gmail and getting and sending an email, or getting a Bitcoin account at an exchange and buying Bitcoin and sending it around and using it, then it sort of all makes sense. So it's definitely not this process. At least for us, we're still learning about it every day. There's something new, and I think for most people, even people with heavy engineering backgrounds, it is a process of it's a bit of a struggle to sort of wrap your head around it. It's like almost like a new color, because imagining a new color, because the way, like, this concept of not a centralized, the internet is silos, right? It's Facebook, it's Google, it's Amazon, it's Microsoft. It's completely centralized, and in many ways, and then all of a sudden it's like, wait, we've got this thing that's like throws your entire model out and turns it on its head, and so it shouldn't be necessarily something that's so easy to grasp.
So you decided pretty early on, I think in the fall of 2012, if I'm not mistaken, that you were gonna, I think, buy up, you guys set this goal to get 1% of the outstanding Bitcoins, and you started buying. How quickly did you reach that decision? What got you to that point where you were willing to invest to that level? I mean, I guess at that point, a Bitcoin was worth $8, $10, something like that, so it was a smaller investment,
right.
But how quickly did you get there? Not how quickly did you get the 1%, but how quickly did you get?
It took a little while
to do that?
because the liquidity of the market, it was very thin, and the market cap of Bitcoin at that point was, I think, $100 million. So even buying a few $1,000s worth of Bitcoin could really, that touch would move the market. But I think we did it over a couple weeks, in maybe a few months there, plus or minus there, and then. We didn't really set out saying, hey, let's just go buy 1%. I think we got to a point where we're like, hey, we actually have a fairly reasonable amount of this. I guess we do have 1%. And then we sort of didn't really talk about it for a while until, I don't know, at some point we felt like, we really like this technology. We're putting, a ton of time and thought and energy into it, and we want to just become a lot more public with our involvement.
Yeah, I mean, I remember, because I wrote that first story, that at that point there was really nobody out there with a name that anybody knew attached to Bitcoin. I mean, there are now many names, Andreessen, and I mean, so much of Silicon Valley has now sort of come out behind Bitcoin to one degree or another. But you guys were, in some sense, the first people who anybody knew who put your name to it. And was that a tough decision? I mean, did you worry at that point that this was still something that, the reason nobody else did it was because they were worried about their reputation? Were you worried about that when you did that?
I think. I think like at that time, for those who aren't haven't been following Bitcoin for that long, it was the headlines were dominated a large proportion by the dark web, Silk Road, and so Bitcoin definitely got a bad rap, even though it was a super small percentage of like the actual activity, and the vast majority of participants were not looking to sort of do illegal or illicit behavior and utilize it on the dark web. It's still, that was what was sort of selling papers, so to speak. So I think that like we were thinking sort of, if we came too early out in front of it, it wouldn't have made a whole lot of sense, or people wouldn't have thought about, it just wouldn't have kind of collided or whatever. At the time, it sort of said, okay, people are starting to understand this, and they're starting to ask like the next level, drill deeper into it, not sort of say, oh, that's just for it's a Wild West or something like that, which it was at that time, but it was much more in the sense of like people hacking and building and technology.
Another thing is that because we were a family office, we could actually buy Bitcoin itself. And that sort of leads to the ETF, is that a lot of VCs couldn't structurally place their bets. They couldn't express their bullish views on Bitcoin because structurally they have to invest in a C Corp. As a private investment company, we can invest in a hair salon if we want to. So we had this structural agility to make that bet. We didn't have to wait for the right company to come around. And we did wait, and we kept waiting with regards to exchanges, and we couldn't find one. So that was the impetus into going ahead and saying, screw it, let's just bet on ourselves and go build an exchange in the US that's regulated and solve that infrastructure problem.
I want to get some questions from the audience, but before we do, I just want to hit on a couple of quick points in the evolution. First thing, your first investment along with buying Bitcoin was in BitInstant, which is no more, and Charlie Shrem, the co-founder of that, is in jail in Pennsylvania. How do you look back on that investment? I mean, are you glad you made it? Are you, how do you view this at this point?
I think it's a no regrets decision. As an investor, you're informed by your failures as much as your successes. It sort of gave us into the ground floor of sort of the Bitcoin ecosystem at the time. The irony and sort of the sad aspect of the BitInstant story is that it was a very viable business. It was basically like a cash network for buying Bitcoin. It was a thriving business. It was growing at a really fast clip. There's poor decisions made by the operator, and that's sort of that story's history. But I think, look, it was very much a learning process.
It opened up the entire world, and so like you're gonna stub your toe, but when we look at our entire, Bitcoin portfolio and our experience there, making that investment and doing the work to understand what Bitcoin was, because you had to understand what Bitcoin was in order to make that investment, led us to sitting here with you today.
And as investors, what could you have done differently, or are there things that you would do differently now, having made more investments?
I think not make that investment.
But I think one of the at some point, most angels are in the scheme of things passive, right? You're not a majority owner. You don't control the board. You can't unlike public market investors, for example, who can really pressure, and quite frankly, angels are called angels because they're supposed to be on the side of the entrepreneurs, and there's a level of trust, right? When the entrepreneur is running a money services business and says, look, compliance is first, we have our program, we are following the things, you can't dig under the hood and look at every single nut and bolt and make sure that the engine is running exactly how that person. There has to be a tacit trust, and in this case, it wasn't, the message from the entrepreneur was different from the actual behavior, but that happens.
Yeah, and I think that these concepts of what it means to be compliant, and back then no one knew what being compliant meant for a Bitcoin business. Do they have to be regulated? People didn't know that. So when we made that investment, months later, maybe, 5-6 months later, FinCEN came down with guidance, and we're still we're pretty much there in New York, but New York is way ahead of other states on this. So, the tricky thing with Bitcoin is that the SEC finally said, they said that, they're not touching it because it's not a security. The CFTC won't regulate it because it's not a future derivative. They only regulate commodities. The Fed thinks it's out of their purview because it's not centrally issued. It's actually not a currency, according to them. It's a digital asset. The IRS has given guidance. And so it's down, basically the only federal body that regulates Bitcoin right now is FinCEN, Financial Crimes Enforcement Network, which is an arm of the Treasury. After that, it's a 50-state maze. And so, but this was nobody knew who was going to jump in and get it, and that's still evolving. So, building a company and answering all these questions and understanding what the questions are we have to answer, probably would have come, to the table with due diligence that may have tripped a lot of wires.
So the New York Department of Financial Services recently come out with its BIT license, the first kind of state level effort to regulate this. And one of the guys who was involved in BitInstant today, Eric Voorhees, came out with his company and said, we are not going to serve New York customers. We don't want to deal with these rules. People shouldn't have to deal with these rules. You guys have taken a very different approach. Is why? What's your sort of take on BitLicense and whether you want to be operating under it in New York?
Well, I think our take is that New York's one of the biggest financial capitals in the world, and you can work around it and not sort of serve New York customers, but I think you're missing a huge number of participants. So we feel like it's very critical to be here and satisfy the regulatory requirements. I think there's, Eric, I think is in Panama. He's chosen sort of a different route, and there's definitely, a market for businesses outside the U.S. But our goal is to bring in institutional people into Bitcoin and make it look like a much more mature market that you see in like the equities or futures or commodities market. So we felt like New York is leading the charge. This is our backyard. We're going to build here, and we're going to sort of ask for permission and not for forgiveness. Others have taken a different approach or said we're going to bypass New York. That's their decision, but I think that and state by state, because of the way the states are situated, you can avoid New York potentially and operate compliant in another state. But we feel like it's important to be here.
Very briefly, are you guys at peace with what the BitLicense looked like and what that demands of you? Do you feel like it is unnecessarily, or do you think it looks good for what it is?
I mean, we think it's an achievable, target to hit as a money service business. It's not trying to regulate every Bitcoin business. It's regulating on-ramps and people who are, should be regulated as fiduciaries and actually hold money. And I think that's completely legitimate. I mean, these regulations are similar to the ones that, that your bank, your money in your bank account is with right now. And I think that the on-ramps should be regulated. I think that, places like Gemini and shouldn't be, for bad actors. We should understand who's there and who's coming on. So, we're in favor of healthy regulation. We've been in a dialogue with the Department of Financial Services and the regulators for over a year. We testified at a hearing. We're confident that they want this to happen as much as, us or anyone else. They really are a friend of making Bitcoin a home for Bitcoin in New York, but they're also regulators, and they have to take a 360-degree view. It's and I think a lot of Bitcoiners have been really like centric to just their vantage point, and it's not just about our point of view as entrepreneurs building a company. It's also you've got to take the point of view of the consumer, and then the point of view of the larger society as a whole with regards to the few bad apples that will try and co-opt this the wrong way. So I think that they have taken a holistic view of it, and I don't think it's unattainable or unrealistic for us or other companies to hit it. But look, that's kind of the interesting thing about our federalist system is that you don't have to, you can pack up and move to another state. And Georgia doesn't require any licensing, and so you could have opened up in Georgia and worked there for years already. So I think that we support it, and we're really happy that Benjamin Lawsky's office has pushed this forward because they really are trailblazing here, and we have a lot of work to do. America, like 80% of Bitcoin trading is happening overseas. We're really not a part of that in a large sense, and we want to onboard institutional customers and get the big players. Like right now, like Bitcoin was small when we started investing. Like any mid-sized hedge fund could completely pop the price right now. It's so small, and so it's so early days. The hype and the people talk about Bitcoin. They know about it. They've heard about it, but it's so young, and there's so much to do. The fact that we think of Gemini as a NASDAQ place to buy Bitcoin, and there's a few other efforts out there right now, but imagine a stock market with no stock market. There's no NASDAQ, there's no NYSE, so there's no public markets. You can't invest in the next IPO or you can't buy a share of Apple. So there's no real fuel to fuel the economy. And so I think we have to take stock of where we are, where we've come from, and how far we really have to go. And we're not going to gain the trust of Midtown or Wall Street or the average consumer to invest part of their 401k or to start getting involved in Bitcoin unless they can look at it and they don't have to wire their money off to a bank in Estonia or off to Japan or whatever in a place that's not regulated by the same place where they're keeping their money like today. So we have to look familiar. We have to do things, and it's going to be painful. It's not easy, but that's the price of doing business with money because money can be used for bad things, and we have to keep that in mind.
All right, let's get some questions out here. I've got more, but let's hear who's.
You guys just wouldn't mind till someone passes a mic around, then you can answer a question just so people online can hear as well.
Any hands? You want to start here, and then we'll move our way back.
Yes. My first question basically is, aside from Bitcoin, where do you see that the blockchain can have a larger impact, a disruptive impact in our economy? Things like real estate or other transfers of value.
And maybe we'll just start by defining
The blockchain.
The blockchain is the kind of database on which all the Bitcoin transactions are recorded. How much are you viewing that as an opportunity versus Bitcoin, the asset, the token?
So I think that they're inextricably tied. We don't know of a blockchain without a Bitcoin-like carrot so the mining aspect of keeping the blockchain actually having integrity and security is the carrot that keeps the mining network, which is another thing people don't understand is how big the mining network is. It's just huge. It's like, I don't know, half the size of, you probably know this stat better than I do.
600 supercomputers, it's
like the fastest computing network in the world by a magnitude.
Yeah,
and all they're doing is basically mining Bitcoin, and in that process, in that search for basically the block reward, roughly every 10 minutes, I think it's at 25 Bitcoins, they're simultaneously auditing and archiving the list of transactions. And basically they're the referees of the Bitcoin network. And they are telling whether a transaction is valid or not. Right. And so that the blockchain though, you don't get the miners and all these people to invest in mining and keeping the integrity of the blockchain without Bitcoin. So sometimes people say like, I love Bitcoin, I love the blockchain, I hate Bitcoin, and you really need to love them both.
But are there business opportunities that you're interested in that are more focused on using the blockchain rather than owning the asset?
So we've looked at like one company, for example, Filecoin, which is basically piggybacks off of the Bitcoin blockchain, and instead of miners getting rewarded based on how much hash power they have, they get rewarded based on how much storage capacity they give. So it's the larger picture is that people will contribute computing and storage power and create this decentralized cloud. So if you think of like Amazon being your centralized cloud, and then you could decentralize it, but instead of data centers just being, let's say, the closest one for here would be, let's say, in Virginia, you have mini data centers, like everybody's computer all around the city. So it's actually much closer to you in proximity. So that's interesting. I think that
is that one. Are you guys looking to make investments?
We are. We're an investor in that.
Yeah, I mean, I think that title insurance, the transfer of any type of ownership. If you own a car and there is a special cryptographic secret to open that car and start it. If I bought that car from you could send me that secret, and the blockchain could effectuate that transfer. So any type of like chain of custody can be transferred there. I mean, I think that the US dollar will be transferred to its own blockchain in the future. I think that the concept of paper money will not exist. And a lot of people, and I think the highest impact for blockchain and Bitcoin in the US right now is not buying a cup of coffee at Starbucks. It's the settlement technology. It's all of the paper in the back office in Wall Street. It's all of it's the DTC, NASDAQ is just a trading engine. They don't actually reconcile the books. Gemini is NASDAQ, DTC, collapsed into one, and E-Trade as like a web app. So I think all of the settlement and change of custody, changing ownership, title insurance of real estate, there's so many things you can come up with. But I think really kind of like killing back office, like, all paper is kind of the way in which it's going to have a lot of impact today, because our payment systems aren't terrible. Credit cards aren't that painful to use. It's more of like that aspect of Bitcoin will happen in areas of the world where they don't have credit cards or credit cards are not used, and there's no plan for the existing infrastructure to go there. So I do think that the most exciting things from a first world US perspective are blockchains and transferring assets to a blockchain type technology.
We had a question back.
So we'll take one from this side of the room.
Yeah, there was one back there by the camera, I think.
Hey, so I have a question about what the ultimate use case of Bitcoin is, because if you look at the general consumer, whether it's for good or bad, they were using the dark web. And right now, that use case is being taken out by the government. So from a consumer perspective, that's being limited. Now, whether that in general society is a fringe case rather than the mainstream, it's the opposite of that in the Bitcoin world. Now, if you move on from that, what do you really have? You have a Forex exchange in a way, and why it's really beneficial right now is because it's super volatile, so you can make a lot of money on that. But once a lot of more people start using it, it stabilizes. So what that leads me to believe is that ultimately, who's going to make money? Big corporations who have server farms, so they can subsidize their own currency and make like an Amazon can ultimately kind of allow you to use their currency and buy products on their website for a cheaper rate if you use their currency. Now, who does that really benefit? Because it feels like ultimately the point of this originally was really philosophical. It was to allow everyone to have currency. But it feels like the people with the big server farms now are going to have a bigger opportunity to make even more money because they can sell you goods while subsidizing their own cost.
It's a somewhat similar question, but what is the ultimate use case? I mean, you somewhat answered it in saying that the dollar moves there, but who does profit from it, and who,
Well, early adopters, if Bitcoin works, early adopters will profit from it more than late adopters. I think people who are building infrastructure, entrepreneurs who build positive use case scenarios, help remittances or whatever. I think people who are getting involved in working hard and building something that's valuable to people will benefit.
But I think like the ultimate use case of Bitcoin, first of all, there's more likely more than one, and it's still not clear. I think that a lot of people were convinced that the dark web was a huge use case. It's proven not to be the case. In fact, I think Bitcoin has benefited from that use case being pulled out of it.
I think the price it dipped when Silk Road was shut down, and then it actually ended up higher. So right. I think the demand for Bitcoin, the market spoke, and it indicated and confirmed that the demand isn't just for the dark web.
I think, but remittance is an obvious one. Moving money across borders is painful. If you want, it takes time. There's a lot of friction. There's cost. And if you use Western Union, there's pretty high double-digit fees in many cases. So I think remittance is a great candidate. I think micro or nano payments are another great candidate. And then there's situations where, for example, you cover this in Nathaniel in your book, which is Argentina. So it's a great scenario where there's basically hyperinflation, where people are losing 25 to 30% of the value of their native currency. So these people are like working hard to push their money into Bitcoin. And yes, Bitcoin right now there is volatility, though it's been getting steadier and steadier, but it's proving to be a better store of value than their actual native currency. So it's unclear, and I think that it's very possible that in the future people are using Bitcoin and they're never really exposed to Bitcoin. Right now, like if you look at a Bitcoin address, it's not user friendly. It's scary. If you want to send money, you're like you don't want to. It's a string of characters, and if you get one wrong, like you're sending your money into outer space. So I don't think users should ever be exposed to a Bitcoin address. Email addresses are way more user-friendly. So,
just like web addresses, people when they go to google.com, they don't go to, whatever
the IP address.
Yeah.
Right. So I think that we'll be the first to say it's still building, and we don't know. And the thing about it is like what we need right now is people need to be onboarded into Bitcoin. And so if you go back to like the days of the internet, right? Google naturally would have come before Facebook because you don't need two people onboarded onto the web for Google to be beneficial, for it to be a solo use case, there to be utility to search and find what you need. When you get into the social networking realm, you need like two people to basically, at least two people to connect. Otherwise, it's not going to be beneficial.
It's just you on Facebook all alone.
Right, and that's a lonely place. So basically Google had to come first, then Facebook, then LinkedIn, and all these other different apps. And the smartphones have actually, of course, like, you know, given such a new distribution channel to companies like Uber that would not have existed before. So people, you know, yes, it's important to figure out like where are we going with this whole thing, but we have to get people into the system first, and in order to do that, we first have to create a system that's regulated.
And is the exchange Google there? Is Gemini the Google? Is that the first
we see it as
on-ramp?
like, you know, infrastructure to, yeah, I mean, when you think of an on-ramp into a highway,
it's the Google or the Gmail. It's a way to get people into Bitcoin in a safe, secure manner.
But the fascinating thing about Bitcoin is that Bitcoin lowercase b, if you buy a piece of that or buy a Bitcoin, you've bought a piece of the entire ecosystem. So whoever ends up, you ride that wave with it. So you were talking about, you know, there was sort of this idea like, well, maybe the corporations or this or that, but everyone can be a part of this, and this is like completely unique to the Bitcoin network. It wasn't the case in the early days of the internet. You had to pick a company. You know, you maybe domain squatting was the closest thing you could do to you know, buying a piece of the internet. And so, you know, so you had to be a VC or be able to get into a VC, and into a VC, then you're an accredited investor. There's none of those barriers for people to actually buy a slice of this entire pie that may work out.
The people who won in the internet wave, the first wave effectively, were located in, you know, a very small group of zip codes and fit like a very, you know, specific description. Anybody can buy a piece of Bitcoin today. As I mentioned earlier, we got into Bitcoin literally a few blocks away from here. It's unclear, you know, there's Bitcoin there's places where there's obviously a little bit more interest than others, but I don't think that there's, you know, Silicon Valley has necessarily defined itself way more ahead than New York or whatever. There's an opportunity for many places around the world to get in front of this next wave. So that's kind of interesting too. It's really open to a lot more people.
Sorry, I just want to make sure we accommodate some questions from our live stream audience, and we had two. One of which was, when is Gemini launching? And the other is like, what is your like passion behind Bitcoin, and how did you really first get started in all this?
So we hope pretty soon. We're just waiting on licensing, but can't give a exact date right now. But in terms of our passion behind Bitcoin, I guess we were drawn to sort of the technology, the alternative aspect of store of value. I think that it's sort of, sorry, I won't speak for you.
You know, it feels like we're helping build the future of money, and it feels like money is this 10,000-year-old experiment. I think, Nathaniel, one of the things I love about your book is you go through the history of money, and at this point in time, people who are working on Bitcoin and digital currencies are the latest iteration of that experiment. It started with gold, but money has been just about anything you think of, cigarettes, shells, whatever. And you know, even the money today that is so familiar, we sort of confuse familiarity with what's real. We just accept it. But the dollar bill is in your back pocket. You know, this idea of fiat currency is a 40-year-old idea, and it's a 40-year-old experiment. And before that, money was pegged to gold, and there was a gold standard before that. And you know, paper money is very new in the scheme of the entire history of money. And so right now, it feels like we are on the bleeding edge of innovation in a very exciting space, in a space where you can win on both sides. You can win both as reward as an entrepreneur, but also you can have huge impact, social impact, and that's a very rare thing in business, and where you can think that you can actually, you know, help people get money, or, you know, help charities accept things.
Or you know, one of the huge use cases there is basically bank the unbanked. With a Bitcoin address, people can be included in the financial system, and there's you know, hundreds of millions, if not billions of people around the world who literally are not in the system and are not going to get a Wells Fargo branch, in their area anytime soon. So that is a huge social use case
and also just I think we all are a little bit fatigued with the boom and bust in these bubbles. I mean, we grew up, in high school there was the tech bubble, and part of the reason there was a very low entrepreneur scene at Harvard was because everyone was, licking their wounds from that, and there's been so many crises in the last, decade or decade and a half, that it seemed like really interesting that there was this alternative and the elegance of it, the fact that it's all based around math, and there's a predictability about it that was really beautiful. And I think that so many different things, I could probably come up with 100 reasons of why or more.
Can I cut in on behalf of the first live stream questioner and push you a little bit on the question of the regulatory approval process? Obviously, Lawsky's office did give approval to this trust company status for another Bitcoin exchange. But what have they said? How long does this take? Have they given any calendars? I mean, I know you can't maybe talk about your confidential discussions, but how do they? The license is now out there, right? Where does it go from here?
So, the whole time we've been probably in a dialogue for well over a year. We've been building our system and our compliance to a standard that we feel that can absolutely hit the BIT license standard. So we're I think in the process still. It's impossible for you to give an exact date, but we think
it's a jinx to predict. But we feel like it's weeks. Kind of thing, and I'm sure it's great that this is being recorded. Famous last words. I just set myself up, but we do feel like we're on the, to use a sports metaphor, the 2-yard line, if you will. There's obviously no guarantees, and I think if you ask the DFS, they can't predict these things either. They have their own processes of sign off and whatnot. But we've been at this for a while, and we do believe
our tech is. We are ready to operate.
You're right.
Yeah.
And it's closer than the ETF?
We can't, there's rules around a registration statement and
getting us in trouble
the
here.
SEC. So we can't really speak directly to the product, but that process, I think, it's been, I think we filed about a year and a half, almost 2 years ago. There's nothing to indicate that it's going any faster or slower than any other ETF. And we continue to work on that and continue to sort of progress and hit the checkpoints that we internally set for ourselves. So,
but it's inherently, by nature, an ETF product is going to be longer. But we are very encouraged with both regulatory paths and we're excited to get out there. When we first filed our S1, it was July 4th, roughly July 4th, 2 years ago. At that time, Mt. Gox was 85% of Bitcoin volume. So watching the ecosystem and the growth there has been pretty amazing to see. And quite frankly, I think that it's, in many ways, the fact that there is a process is a good thing, because Bitcoin, the exchange infrastructure and landscape and the on-ramps for people who need to buy Bitcoin and things like that, to be, for example, APs on an ETF are much better today than they were 2 years ago.
Okay.
I think we're going to do one more question. I have a very anxious questioner here in the front row, so I'm happy.
Hi.
How you doing?
GA alum. Thank you for coming to speak with us today. I'm just really curious. I'm fairly new to understanding cryptocurrency in general, mostly because I never really had an opportunity to personally invest in it. But I'm just curious, is there a particular reason why it's coded to match with US currency? Is it because you actually believe in the value of the American dollar? Or is it because of regulatory restrictions based on where the company is coming from, as opposed to the euro or?
So is it the question about cryptocurrency in general or Gemini?
Gemini.
So we picked the U.S. because this is where we live. But we had this debate. Which coast would we pick? Which ecosystem would we go to? San Francisco
we go to New York, and we already had our existing family office here and some infrastructure, but it was really the regulatory, it was really the bit license process, and we saw that the regulators were so progressive here. In California, the regulators, I believe, have still been mum on Bitcoin, on the subject matter. So it's unclear what you need to do out there to become regulated. And one of our selling marketing points is that we think that being a licensed regulated exchange is important because consumer confidence, but also it's a chicken and egg situation. You can't get a bank account, you can't get a US banking relationship as a business if you're not licensed. So we thought that that was important because the current exchanges you had to wire out overseas. And so we felt that it would be great to have a U.S. Licensed U.S. bank with FDIC insurance for the fiat deposits, and we also felt it was important to be in an ecosystem where we could get top talent for as engineers. And the financial industry here has some incredible engineers, and we've pulled from some of the best, and they understand what it means to do business with money, the pain of compliance, and all of that necessary friction. And so it's something where you don't necessarily want to build your team around 18-year-old code cowboys. Having people who are maybe a little bit later on, 20s or early 30s, with a bit of experience, especially in the financial world, brings a really good perspective to the problems we're solving. And it's not like if we screw up, we lose your pictures, which you still have on your iPhone. We lose value that may not be able to recover. So we take it really seriously with the high standard, and we feel like we feel like we can meet the regulators' questions. We think we should be able to do that. It's the right thing to do. So all those decisions led to New York as a great home. But I'm sure if things go well, we'll probably be expanding. I mean, Bitcoin's very global, so there's a good chance we'll be in more locations.
All right, so I think we're going to wrap up. If I can just ask last quick question. Have you guys, I remember a couple months ago when I asked, you said you still hadn't sold any of the Bitcoins you had purchased initially. Have you still held on to that initial stash, and are you continuing to buy, or have you held off on that for now?
We're still long-term, very, very long-term hold guys. We're currently not buying Bitcoin, but quite frankly, I think it's always a good buying opportunity if you believe in the promise of Bitcoin. So
yeah, our bet right now. So Gemini is funded by Winklevoss Capital. So we've moved our cannon over there. But like Cameron said, we are bullish, and we still have our Bitcoin stash. So
good. All right. Well, thank you to both of you. Thanks to everybody for listening.